Hey, this is Vishal Kapoor, your friend in real estate, and welcome back to Real Estate Wisdom Podcast. If you get this wrong, it doesn't just squeeze your bank account, it will quietly squeezes your life. Most people ask, can I qualify for this mortgage? But that's a wrong question. The real question is, how much home can I really afford without sacrificing my peace of mind, my lifestyle, and my future goals? And this episode is personal because recently my daughter came to me and said, Dad, I'm thinking of buying. How much can I actually afford in this market? I know they grow so fast. Can't believe it. In that moment, I wasn't just a realtor, I was a dad. Whatever advice is given on this podcast has to be advice I had be comfortable giving to my own child. So today, you will hear the exact way I walked her through that question. Think of this as you sitting with us at the kitchen table in 2026, trying to figure out how much home you can really afford. Some of this might challenge you. You might feel a bit uncomfortable. But if you stay with it, it could save you from years of quiet financial stress. Let's get into it. The big lie I have warned her about. When my daughter showed me what the bank said she could qualify for, she asked the same thing many people do. If they are willing to lend me this much, that means I'm okay, right? And here's what I told her: the bank's number is not your happiness number. It's not your peace of mind number. It's a risk number. What they are really saying is you are statistically unlikely to default at this level of borrowing. They are not saying you will feel relaxed and comfortable with this monthly payment. They don't see how much you value travel, how often you go out with friends, the support you might give to family, the business or life changes you dream about. They don't see that because they don't have that access. So, to her and to you, the first shift is this: stop asking, how much will they lend me? And start asking, how much can I carry and still feel free? Because there's a huge difference between being approved for an amount and being at peace with it. Know your real monthly number. With my daughter, we didn't start with house listings, we started with her real month, not the polished version, the actual one. We opened her bank app and laptop and listed her real expenses: current rent or housing, car payment, gas, insurance, maintenance, phone and internet, groceries and eating out, subscriptions and little leaks, debt payments, if any, and very important, what she wants to save or invest each month. Then we imagine a realistic mortgage payment for the type of home she was looking at, not the maximum the bank would allow. A number tied to an actual price range. We plugged that in and looked at what was left over. And I told her the same thing I will tell you. Don't just look with your eyes, check in with your body. Does that leftover number make you feel proud or does it make you feel tight? She realized something important. At the top of her approval, the leftover amount put her in hope nothing goes wrong mode. At a lower, more reasonable payment, things were tighter than she expected, but still manageable. That feeling in your chest is a data. It's most honest than any approval letter. The three tiers of affordability. To help her think clearly, I explained a simple framework which I also use with my clients. These are three tiers of affordability. Tier number one, survival. This is where you can technically pay for everything, but you feel squeezed. You're checking your balance often, you hesitate before saying yes to anything extra. You can do it, but it doesn't feel sustainable. A lot of people end up here when they buy at the very top of their approval. Tier number two, comfortable. Here, your core bills are covered, you have room for some lifestyle, and you are still saving. And unexpected expenses is annoying, not devastating. This is where most people think they will be, but they accidentally push themselves back into survival. Tier number three, flexible. Your housing cost is clearly below what you could qualify for. You have real breathing room, you can invest, you can travel, you can say yes to opportunities without constant stress. With my daughter, I asked her the same question, and I will ask you, which tier do you want to live in for the next 5 years? She admitted that part of her was tempted to stretch into survival to get something nicer and more Instagram worthy. And that's honest. But in 2026, with higher living cost and more moving parts, living in survival mode just for a slightly nicer home can drain your energy and joy. The temptation to stretch. When we looked at listings together, we saw the classic trap. For just a little more each month, you can get a slightly bigger space, better finishes, nicer view, and then for just a little more, you can get even better. It never ends. I told her, yes, you can stretch. You are responsible. You will likely make it work. But ask a different question. What will it cost you emotionally? If stretching means cutting out the things that actually make life rich, time with friends, simple outings, travel, investing in your future, then the real price is higher than the monthly payment. A home is meant to support your life, not swallow it. For my daughter, I was very clear. If the payment puts you in survival mode for the next 3 to 5 years, I had rather you choose a slightly more modest home and keep your freedom. And the same applies to you. Before I felt comfortable with her moving ahead, I asked her 5 questions. You can walk through these for yourself right now. Question number one. If my income dropped by 10 to 15% for a year, would I still carry this home without going into panic? If the honest answer is no, you are very close to the edge. Question number two. After paying for this home, will I still be able to save consistently and live a life I enjoy? Or does this payment eat every bit of flexibility? Question number three. Which tier will this put me in? Survival, comfortable, or flexible? And am I okay living there for the next 3 to 5 years? Naming the tier forces honesty. Question number four. Am I choosing this home for me and my goals or partly to impress others, friends, family, social media? Yes, a lot of things these days we're doing to impress social media. There's nothing wrong with wanting something nice, but chasing 25, 30-year payment plan can become really burdensome. Question number five. If nothing changes in the market, would I still be happy with the payment 3 to 5 years from now. If your plan only works in a best case scenario, it's worth pausing. When my daughter answered these honestly, the comfortable payment range was very clear. The stretched one looked exciting on paper, but felt like a trap in her gut. I also reminded her, and this matters for you too, that 2026 is not 2012 or 2019. We are dealing with higher cost of living, rate movements that can affect renewals, property taxes and utilities that rarely go down. So the strategy is not buy as high as possible and hope everything works out. The smarter approach is plan for real life, not a perfect scenario. If things go better than expected, fantastic. You will have extra room. If things stay tight or bumpy, you will still be okay. That's the resilience you want built into your decision. Practical next steps. Here's the same roadmap I gave my daughter and that you can use today. Step number one, audit the last 2 3 months. Look at where your money actually goes. No judgment, just awareness. Step number two, decide your comfort band. Not a single number, but a range of monthly housing cost where you feel good, not just barely surviving. Step number three, share that band with your mortgage broker and realtor. Say clearly, I know I can qualify for X, but I want to stay around Y. This keeps you aligned and stops you being pushed toward the edge. Step number four, be willing to walk away from properties that force you into survival mode. FOMO is temporary, stress is long term. Step number five, think in seasons, not in movements. You are not just buying month one, you are choosing a financial rhythm for the next several years. If that rhythm is too fast and too intense, it will show up in every area of your life. What I told my daughter, I'm telling you. So let's come back to the core idea. How much home can you really afford in 2026? Not according to the bank, not according to the social media, not according to your neighbor, according to you, your values, your stress level, your goals, your family. What I told my daughter is what I will tell you. Don't chase the highest number you can qualify for. Chase the number that lets you own a home and still own your life. Before you fall in love with a listing or a neighborhood, sit down like we did at our kitchen table and figure out your comfort number. Then build everything else around that. If this episode made you think differently about how much home you can really afford, share it with someone who's in the same position, a friend, a colleague, maybe even your own son or daughter. And if you are planning a move in 2026 and want help walking through your numbers the way I did with my daughter, reach out. I'll be happy to help. Because the goal is not just to buy property, the goal is to build a life you are not stressed to live in. Thanks for listening for a real estate wisdom with Vish. I hope you're liking this new format, and I will appreciate that if you can send me more questions like this, which can be used in the future podcast. I really looking forward to 2026 to helping as many people I can with my years of experience in real estate industry and looking into what's happening in the market on the ground level. not just the headlines, not just the all the. I know there's a lot of negativity, and don't get me wrong. There's definitely a market have gone down significantly for sure, but that shouldn't stop you in buying or selling your property. If you get the right advice, you can achieve your goal. Again, thanks for listening. Talk to you soon. Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.